Oil and gas analysts are now more likely to be predicting price crashes than price booms. Welcome to the world of oil and gas analysis, where predictability has become a thing of the past. The industry's unpredictability can be attributed to a series of events, starting with the 1973 oil embargo that sent prices soaring. The 1980s saw the introduction of deregulation, which led to price volatility. Decades later, the 2000s witnessed the rise of the US dollar, causing global demand to increase, but also led to an energy crisis in 2008. These turning points have created a complex web of market dynamics that oil and gas analysts must navigate. Unpredictability is the new normal, making their jobs even more challenging today than in the past. The shale revolution has undoubtedly been a game-changer for the oil and gas industry. In the mid-2000s, advances in hydraulic fracturing and horizontal drilling made it economically viable to extract oil and gas from shale formations, a development that has since led to a significant increase in global supply. This surge in production has put downward pressure on prices, making it challenging for analysts to accurately forecast demand and prices. The unpredictable nature of shale production is also a key factor, with the likes of the U.S. seeing significant fluctuations in oil and gas production levels in recent years. Take, for example, the Permian Basin, which has experienced rapid growth in oil production, but also faces operational challenges such as water scarcity and pipeline constraints, creating uncertainty for analysts trying to predict future production levels. As a result, the shale revolution has created a perfect storm of uncertainty, making it harder for analysts to make informed predictions about the future of the oil and gas market. One key takeaway from this is that the traditional supply and demand dynamics are no longer as simple as they once were. The rise of renewable energy is another significant factor contributing to the unpredictability of the oil and gas market. In recent years, the cost of renewable energy technologies like solar and wind power have decreased significantly, making them more competitive with traditional fossil fuels. As a result, many countries and companies are shifting their focus towards renewable energy sources, leading to a surge in demand for these technologies. This, in turn, has created a new dynamic in the energy market, with oil and gas producers facing increased competition from renewable energy providers. For oil and gas analysts, this shift presents significant challenges, as it requires them to not only keep track of traditional market factors, but also monitor the growth and development of the renewable energy sector. To accurately predict prices and trends, analysts must now consider the impact of renewable energy on demand and supply, and how this may disrupt traditional energy markets. This is a significant shift, and one that requires analysts to be highly adaptable and knowledgeable about multiple sectors, making their job even more complex and challenging than before. One of the most significant challenges oil and gas analysts face today is navigating the complex web of global politics and international relations. The truth is, oil and gas prices are often as much a function of geopolitics as they are of supply and demand. Consider the Strait of Hormuz, for example. This narrow waterway in the Persian Gulf connects major oil producers to key markets in Asia and Europe. In the past, any disruption to oil shipments through the strait has led to significant price spikes, as seen during the Iranian Revolution in 1979. Similarly, ongoing tensions between the U.S. and Iran, as well as between the U.S. and Venezuela, have had a profound impact on oil prices. Analysts must not only stay up to date on the latest developments in these regions, but also consider the broader implications of global politics on the oil and gas market. With trade wars, sanctions, and diplomatic crises all on the horizon, it's no wonder oil and gas analysts are feeling the pressure to accurately predict prices in an increasingly unstable world. In conclusion, the role of an oil and gas analyst has never been more complex and challenging. To stay ahead of the turmoil, analysts need to be agile in their predictions, closely monitor global events, and adopt a forward-thinking approach that incorporates emerging trends and technologies. By doing so, they can navigate the ever-changing market and make informed decisions that mitigate risks and capitalize on opportunities.